Hey guys, it is Julie here with JT.Wealth. In today's video, we are chatting about defensive stocks and the important role they play during a volatile market. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are chatting about defensive stocks. So we are going to cover exactly what a defensive stock is and why it plays such an important part of your investment portfolio, especially during uncertain times that lead to market volatility. We are also going to discuss what beta is when you're looking at a stock and how it can help your investment decisions, and then go over a few great examples of some solid defensive stock picks. And before we jump right into all of that stuff, this is just your reminder to please make sure that you're subscribed to the channel. Really helps us grow and helps you stay up to date with all of our latest videos. And if you enjoy this video, consider giving it a big thumbs up as well. All right, so to start off, what exactly is a defensive stock? Quite simply, it is a volatility resistant stock that will continue to perform despite unfavorable market conditions. Defensive stocks work because they're usually found in industries that produce necessary and often relatively cheap products that consumers cannot go without. So the utility, food, and oil industry are common sources for defensive stocks because electricity, running water, food, and gasoline are basic necessities. Demand tends to be fairly stable year in and year out. Now, defensive stocks are known for weathering economic dips, but it is important to note that they often tend to ignore big market upswings. So typically during a downturn, they will outperform the market, and in an upswing, they will underperform. But thanks to the stability of demand for their products, sales and earnings growth in a defensive stock industry tend to remain constant in good times and bad. With this in mind, defensive stocks can provide investors with a great way to hedge their overall portfolio risk. Now, I bring up defensive stocks in this week's video because I think we are definitely in some uncertain times. Not only are we in the month before an election, which inherently causes market volatility, but we're amidst a global pandemic. So markets are definitely volatile. And yes, defensive stocks are not going to have the same eye-popping gains as some of those spec stocks or growth stocks out there, but they do play an important role in everyone's portfolio. And I'm not saying your entire portfolio needs to consist of defensive stocks, but there's definitely room for a few of them in there to help weather out some of those storms and give you that predictable, stable growth. Now, one easy number to look at when trying to determine the overall volatility of a specific stock is its beta. Now, quite simply, the beta is a measure of the stock's volatility in relation to the overall market. Now, by definition, the market, such as the S&P 500 index, has a beta of 1, and then individual stocks are ranked according to how much they deviate from the market. So a stock that swings more than the market over time has a beta above 1. If a stock moves less than the market, the stock's beta is less than 1. So if you have a stock whose beta is 0.5, that means when the overall market swings, it is only going to move about half as much. So if the market were to decline about 20%, you would expect that stock to only go down about 10%. On the converse, if the market were to go up 20%, you'd only be expecting about 10 return on that same stock. So like I said, not as exciting of returns, but more predictability and less volatile movement. So today I'm going to highlight 4 different defensive stock companies, and those are going to be Public Storage, Flowers Foods, Domino's, and Visa. Starting off with Public Storage, who trades under the ticker PSA and is currently right around the $240 mark. Now, PSA is actually a REIT, which is a real estate investment trust. And these guys are the largest self-storage landlords in the world, with Public Storage having over 170 million square feet of rentable space. Now, self-storage is not only a recession-resistant industry, it's actually counter-cyclical, as unemployment or underemployed workers are often forced to downsize during recessions. Moving to a smaller home often means needing a place to store furniture and other belongings. And simplicity is what makes this such a nice business. Unlike apartment or office tenants who are constantly on site and regularly need face-to-face time with the property manager for repairs or other concerns, self-storage tenants rarely visit, and they also tend to be sticky. Once you've taken the trouble to move your belongings, you're not likely to take the trouble to move them out. Another great thing about defensive stocks is that they often pay dividends, and PSA pays a dividend yield of 3.41%. Now also take a look up in the second row in the middle there. Their beta is 0.15. That is extraordinarily low, meaning their overall volatility in regards to market conditions is minimal. Now, Public Storage has incredibly low debt, very low operating costs, and can remain profitable even during times of distress. They also have a huge margin of safety, as it is said that they could remain profitable if their occupancy rates went down to just 30%. Currently, those occupancy rates are over 90%, so a really healthy budget there, making these guys a great defensive stock. Second on our list today is Flowers Foods Incorporated. These guys trade under the ticker FLO, F-L-O, and are currently just shy of that $25 price point. Now, the name Flowers Foods might not ring a lot of bells initially, but these guys are a very large bakery goods company with over 47 bakeries across the country. And they have some pretty big brand names such as Wonder Bread, Nature's Own, Cobblestone Bread Company, Country Kitchen, Tasty Cake, Mi Casa Tortillas, all kinds of baked goods. Now, it shouldn't come as a large surprise that these guys are a defensive stock, as during any recessions, staples like breads, snack cakes, and tortillas aren't going down in demand. People have to eat, and Flowers Foods has been meeting this need since 1919, so a very solid track record as a company. Flowers Foods is said to be on track with their core priorities, which include developing its team, concentrating on brands, prioritizing margins, and looking out for prudent buyouts. To this end, the company intends to shift focus towards value-added branded retail products, which are anticipated to aid top-line growth and enhance margins. And of course, they also pay a dividend with a dividend yield of 3.22% and a beta down at 0.48. And Flowers Foods has actually increased their dividend every year since starting to pay it back in 2002. So always love to see that steady growth. Third on our list today is the tasty pizza company, Domino's. These guys trade under the ticker DPZ and trade right now just shy of $400. Now, Domino's has been a king among defensive dividend stocks, and it's no surprise that it held up so well this year during a time where people weren't leaving their homes and restaurants were closed. But beyond pizza delivery, Domino's has been a tech leader within the food services industry between their website and app capabilities. And pizza is just one of those guilty little pleasures that people are unlikely to forego during hard economic times. Now, looking at their dividend, it is very light at just 0.77%, but this is a consistent stock that has shown solid growth over time as well, and they have a very favorable beta at 0.33. They have raised their dividend every year since 2014, so hopefully we continue to see this down the future and it gets a little bit higher and continues to be a really solid long-term investment. And last but not least on our list today is Visa, who trades under the ticker V and is just above the $200 mark. Visa is known for its ultra stability. For decades, it has been recognized globally as a leader among payment processors. It's a company with $12 billion in free cash flow, which suggests an ability to withstand macroeconomic turbulence. Throughout the Great Recession, Visa managed to increase its dividend payments. That's a great sign. Today, with the virus, many people continue to shop online, and Visa could stand to benefit as electronic payments may increase substantially. Looking at their stock chart, they do pay a dividend. It's just down at 0.6%, and they have a bit higher beta than the rest that we looked at today at 0.91, but still below the overall market. But overall, these guys are a well-known brand name and a very cash flow positive company. Other honorable mentions of defensive stocks would include companies like Kroger, Campbell Soup, Walmart, Johnson & Johnson, FedEx, The list goes on and on. This is just a really high-level overview to give you guys a few ideas of some good defensive stock picks. As always, these videos are just meant to be educational and entertaining. They are in no way a suggestion to buy or sell any specific stock, and any trade should always be made based on your own due diligence. On that note, let me know what you guys think of defensive stocks. Do you have some in your portfolio, and how are you making them work for you during a time like this? If so too, what are some of your favorite picks? Let me know down in the comments below. And if you made it all the way to the end of the video here, you better give us a big thumbs up and make sure that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.